And there you go. Welcome to another week of Vishal and Company. It's just the three of us, and it does say TK just because I've been doing some other things. That's Joseph at the top. I've just removed the name. I'll put his name in. I promise it's right there. There you are, Joseph. How's it going there, brother? Sitting at the top, Vishal's right above me, and of course I'm down below just holding the whole thing up. And it's a wacky week, kids. It's a wacky in week. 7.5% inflation numbers coming out on Monday. The markets are going nuts. We got feds that are threatening huge rate hikes. And, Russia's going to fucking get military now. So, Vishal, do you want to take a look and tell us what's happening on the charts?
Man, where do we even start? Holy cow, what a wild week. And, I'm trying to be a bit cheerful because we want to try to remain optimistic. And positive here. But yeah, I mean, the inflation number, 7.5%, beat Wall Street expectations, beat everyone's expectations, highest in 40 years because, we haven't had this type of inflation in 1982. By the way, interest rates at that time when the inflation hit 7.5 was 11.25%. For those that are interested, if, how we're going to try to beat this. I don't know if 25 basis point cuts are going to cut it.
Do it.
No, unless we believe the whole transitory inflation story and magically inflation is going to decline back to 2%.
Let's just all stick our heads in the sand. It'll go away.
Yeah, that's essentially what they're saying. Galen mentioned about the Fed presidents, right? We had Fed presidents Bullard, we had Bostic, we've had another Fed president come out. A lot of them are flip-flopping, which is just, it doesn't really make you confident as like an investor here because...
No, there's no united front. None.
No. And markets were expecting 5 rate hikes this year. Fed Bostic came out before the CPI numbers earlier this week and said, I like 3, hopefully 4 or 5, but 3 I think is what we can do. That would take rates up to 1% if it is a 25 basis point hikes per hike. Yep. And then, you had, what's his name? Bullard now coming out saying, oh, no, we got to be over 1% by July. So we got to be raising 50 basis points here. And it's just a lot of flip-flopping. There's even articles about there's supposedly an emergency rate hike that might happen. Well, it's supposed to happen either today or even Monday. This is an article that was on Zero Hedge emergency rate hike. I mean, I don't know about you guys, but to me, if there is an emergency rate hike, that would, I would think that would sort of show signs the Fed is sort of panicking, in a sense.
Oh,
right?
Yeah.
Right? Yeah. So I don't think they would do that because it would just add so much volatility. And some of the numbers I was reading was like the rate hike would be like over 1%, which I think no one will, with debt or variable mortgages want to wake up and be like, yo, what the heck?
No, absolutely. But I mean, you're looking at it, and there's memes going around on I think it's Wall Street Bet Silver, about about the whole 25 basis point hike, somewhat akin to standing off with a handgun and a tank
against a tank.
Yeah, it's like we're going to be bowled over with this no matter what. They've left it too long, so the big rate hikes I think were probably necessary. Don't you? I mean. I don't think they can wait for the markets to go, yeah, we'll be fine with that. Go ahead.
Yeah. But like, we've talked about this. The thing is the amount of debt that's in the system right now. A rate hike is like high rate hikes is not going to hurt people with mortgages, but also, there we are, 30 trillion US dollar debt. But it would also hurt people with, governments as well, who are also in a lot of debt. But the pensions, right? That's the word I was trying to look for. Pension funds would get quite hit. And it goes back to, Galen, what you've been talking about, right? There's been a lot of paper wealth created.
Yes.
And a lot of people are assuming markets will continue to go up so that they're rich, keep borrowing. But a lot of that can change, within a few days or within a day, even. So, crazy stuff. And, not to just focus on the interest rates. Apparently, there's geopolitical talks now too about maybe Russia could be invading the Ukraine here very soon.
Wars are coming.
There's a lot of stuff here just blowing up, or not blowing up, but a lot of fear.
Soon,
though. A lot of fear volatility. Not maybe blowing up. Yeah.
It was a good choice of words. I like it.
Yeah.
I'll give you.
It's rather portentous.
Right. So market-wise, let's take a look at a few charts here because there's a lot to talk about in terms of the charts. Earlier this week, it looked like markets were going to finally break above our resistance zone. For our Discord followers, I've been a bit quiet on the market side because honestly, I've just been on the sidelines. We're sort of on in no man's land territory, where we're still deciding whether we're going to make another lower high, which means the downtrend continues, or if we break above basically what was the breakdown zone for this whole bear market or downtrend, and essentially would neutralize that downtrend. And right now, the bears are winning, obviously, and it looks like we might be making that lower high. So we have actually taken out today.
Now, I've got a comment here from a user by name VIX saying that oil is rallying. Of course, we've mentioned that, and there's solid ENB earnings as well.
Yep, and I like his name too, VIX, because I think that might be a good trade to go long here.
Yeah, no kidding.
So yeah, here's our SPY drop here. Here's the Nasdaq. You guys can still see technically we could be making the lower highs there. The Dow Jones is also breaking down here as well, and then of course the small caps, which is the Russell 2000. The most important chart, and I've talked about this a lot of times. By the way, the VIX is up like 23% today, so there we go. VIX. I hope he took some longs on that.
Oh yeah, no kidding.
But one of the most important charts I think is actually the 10-year yield. And this is sort of talking about interest rate hikes down the road. I do watch the 10-year yield. I also watch the 2-year yield, which, look at that, has been taking off. So the short end of the yield curve is taking off. Essentially, people and the market pricing in multiple rate hikes this year. The 10-year yield is just what I like to watch. And whenever this is spiking, so we actually did print over 2%. Yesterday, which are levels we haven't seen since early 2020, so pre-pandemic times, and now we're coming back above 2% once we're post-pandemic now. But whenever this is shooting up higher, I tend to find that the markets don't like that, right? Because they don't really like high rates, especially if you think a lot of this market is propped up because of cheap money and debt. And when it declines like this, it's technically what you sort of want to see, right? It's a good sign that the markets might be propped up. So watch this 10-year yield. This is the most important chart I think any investor should be watching, because if yields continue to climb higher, and I think there will be a time where the markets will sort of accept a 10-year yield over 2%, but I don't think that's here and now just yet. So watch for that 10-year yield if it begins to stabilize and the market finally accepts high rates. Because as Galen mentioned, there's just so much flip-flopping here. No one really knows how much rates are going to move higher and how many rate hikes. So a lot of volatility, and definitely watch this 10-year yield. Let's do 4 more quick charts here.
Another great comment here from VIX.
Yep.
Generally, when VIX rallies to 20 to 30, it's an indication that, or it could indicate an entry point into equities. But with the 10-year yields also spiking, it seems pretty hard to predict now. And I would have to agree with them.
Yep.
We are in an unprecedented economic environment, and I don't think anybody has the right answer at this point. And I think that's why the Fed is just like spazzing out. They have no fucking clue. They got all their tools out, but like we said earlier, it's a handgun against a tank. What are you going to do?
So you guys might have heard my surprise there, but gold is just shooting higher here. It's up $36, and I had this trend line, this weekly trend line. So if we get this weekly close by today, holy cow, that's a gold breakout. I'm sort of surprised because I was thinking money might run into the US dollar for safety here, but I guess you would run into metals if you think there's going to be a world war. A world war, right?
No, that's it. That's it. I mean, we're realistically the way that the geopolitical state is right now. We're heading into an area where you have to get into solid commodities. Right. It's not going to be a time where you're going to be able to play speculative stocks. That's my opinion. Here I'm calling it. The Fed doesn't even know what it's doing. But I mean, I think that we honestly are heading into a huge reset, kids.
Right.
10 years, man. The next decade. Sorry, that's my call.
No worries, man. No worries. But so let's take a quick look here on the dollar, because I'll be honest, this metal move sort of surprised me because I was looking for that gold breakout, which might actually be confirmed. So that might change some things here going forward for me. But even the dollar now is popping. So you have the dollar is up gold's up, silver's up. Let's see if one of them will give way, because generally if there's a stronger dollar, people tend to see metals fall and vice versa. But we've said in the past that both the dollar and metals could go up if there's this entire run to safety, confidence crisis type sort of scenario. And I guess if you're thinking there's going to be a conflict, you might want to hold cash and precious metals as bullion. So keep an eye out on this dollar chart. I'm still not discounting this. I think we might still see a run here in the dollar. And then yes, just finally, as Vic said, oil. I'm just going to open the CFD here because I just like that chart. It's breaking above recent highs here. And if you read our work on oil, I was hoping there would be a pullback. I was like, I would love to see a pullback, because if we do break above the recent highs above 92, it means we're probably hitting triple-digit oil very soon.
Yeah.
And that's something I don't like, because it's just going to add to the inflationary pressures. I was hoping for a drop here, but we still have
I think with pressures of war at this point and an almost confirmation of it, oil is just going to skyrocket. There's no there's the military industrial machine consumes it on a huge basis, and we'll all be desperate for it to secure a supply. So oil's going to start popping hard.
Yikes. So let's hope for the best, though. Let's hope things calm down over the weekend here. But if we break out like this, folks, we might be looking at triple-digit oil as soon as next week. Obviously, if there is a conflict, I think you surpass $100 very easily.
Yes, very much so.
Maybe 110. I know a lot of numbers are like, a lot of people are talking about 120. So
some guys have even gone as high as 150. I think 150 isn't absolutely ludicrous. I think it's on the high end, but I don't think it's out of the question. TK is actually watching the show today, and he says the U.S. seems to be heading for a currency crisis, and I would have to agree with him. What do you think, Vishal?
Yeah, so that's I think, Galen, we haven't used that term for such a long time. I think we used this when the Fed was printing money a year ago, but that's sort of the worry I've had, right? And why I'm actually big into precious metals and actually cryptos as well. Mostly the metals. Like, I'm a big fan of the metals. You guys know that. But I think there is going to be this currency issue, and that's technically what inflation is, right? Inflation, I know there's talks about supply chains and all that kind of stuff, but inflation has always and will always be a monetary issue, and it's because the money you're holding is losing purchasing power. So they're using excuses like supply chain disruptions and all that kind of stuff, trying to avoid blame, right? Because everyone knows
all of those are straws that help break the camel's back. The camel was already heading for the floor as a thing. So
and I think the reason why inflation picked up is because technically, and in the past, a lot of this money printing has gone into assets, right? Has gone into financial markets and stuff. And now that people are starting to pull that money out, you have this system where there's
we're going to have a combined. It's going to be a vicious circle. Sorry, man, I just jumping in because I'm so not excited, but frightened, I guess, in a certain way, because I can see it happening. It's going to be a vicious circle because you pull your money out in order to buy the bread that's starting to go up on the shelves, and that makes your stock value decrease. That's going to make you panic even worse. Pull more money out, drive inflation even further up. Oh man!
And just to quickly answer TK's point here. That's why I'm watching the dollar here, because technically it still is that world reserve currency. I know a lot of people might disagree with it, but because they're still the hegemon, the U.S. dollar is that reserve
it still sits in that position. You're right.
Yeah,
and so it's got that moat about it, but it's slowly deteriorating.
100%. So this is the issue here, because if the dollar does spike higher, if money starts running into the dollar, it's going to start hurting these emerging market countries. We've seen Turkey has had issues because they have a lot of U.S. dollar-denominated debt, because generally what these emerging market countries do is, because domestically there's a high interest rate, right? So Turkey's interest rate at one time was 13%. So if you're a corporation in Turkey or Argentina or somewhere that has high interest rates, you can borrow U.S. dollars because it's the reserve currency and it's readily available. The US
but if you're in Turkey, Erdogan will just fire you and throw the numbers under the table. That's not happening. We're not having those interest rates. We're good.
Exactly. But in the past,
before we get too far afield, I'd actually like to go back and what does this mean for the average person? I mean, what can they expect in the next 3 to 6 months?
Food, gas.
Like these
Those are the
prices
first
gonna get
things.
jacked up.
They're already
higher
jacked up,
costs
but
for
it's
everything,
it's gonna
Yeah, I know.
really ramp up.
My bread's at 550. That's crazy. But I mean, like what kind of a price inflation can we expect?
Well, you saw 7.5 already, right?
Yeah.
And this is just the beginning of I think the peak of what we're going to be seeing. And the problem is it's going to have a follow-on effect. People,
Yeah.
I've had people argue with me going, well, the guys that invest in stocks are not worried about the price of bread because they can afford it. Well, not necessarily, right? Because the fact is that when you have to start pulling that money out to pay for the bread, then you're going to get this precipitous sort of cycle going on that's really going to wreak havoc. And once the bread starts going up, people are going to start going, well, you know what? Car loans are going to start to default. Once those start to default, then you're going to start to see mortgages go down. It's a wild effect. So right now what we're seeing, and correct me if I'm wrong, Vishal, is we're seeing the tip of the iceberg. In terms, this is the canary in the coal mine.
Still early.
Yeah, when food prices and energy prices start to skyrocket, it's only a matter of time before the discretionary funds that people carry in their lives become depleted and they can no longer do the large ticket items. For instance, used cars, that'll be the first thing hit. Then new cars, then mortgages, and we're going to start to see businesses go down. So that's my Chicken Little prediction there.
Like the one thing we're hearing is that governments might be forced to impose price controls, which is pretty scary if you think about it, because then we're going down a different path. But see, the issue with price controls is if you have price controls for, say, bread and for wheat and for milk and that kind of stuff, you have to subsidize a lot of these farmers. So it creates more money, and you don't want interest rates to go higher then, because that's more debt for the government. So
it doesn't work, and you're essentially walling off your economy too, because you can't compete on a global scale if you have to subsidize the living shit of your interior economy. Namely China, that's one great example right there, right?
Yeah, so let's hope that's not the case. But inflation to me again is preserve. You want to preserve your purchasing power, and I think metals and commodities, hard assets, are the best way. And maybe this is a good segue because there is another non-fiat asset out there that you're the master of coins.
Totally. Before we shift over to that, Vishal, I want your opinion on something.
Sure.
This is inevitable, right? It's going to come crashing down, as far as I'm concerned. Rather than just sort of like skirting around the issue and trying to just get by, what can people do right now to prepare to make this as painless as possible? It's going to be fucking painful, but what do you think investors can start doing in terms of squaring away their assets, establishing cash positions? What do you think their best moves are?
So let me just give an example, again, and I'm not a financial advisor, so this is just what I'm seeing. Obviously, I haven't traded in an inflationary period. I've read about them. But generally, we do see people run into these hard asset, physical, tangible commodities. I'll give you an example. I talked to my coin dealer, and what he's doing is he's like, hey, man, I don't know how to deal with this, so I'm putting 20% of my portfolio in silver, 20% of my portfolio in gold, physical silver and gold, 20% in Canadian dollars, 20% in US dollars, and 20% in Bitcoin. And I'm like, hey, man, you know what? Maybe that's a nice sort of safety net to try to keep yourself afloat, right? So you can consider that, right? Again, I'm not saying that's the right thing to do, but I do like the metals allocation there. And again, if we do see the US dollar rise because of money flooding to it for safety, that would help you out there as well. If you want to stick with the stock markets, as Galen said, you probably don't want to be in the technology and a lot of these growth stuff, right? I'm looking at things like Superstore, Loblaws, Walmart, places where people will always have to buy food. The utilities, right? The energy companies. Here in Canada, we have Fortis BC. If you pay your gas bills to Fortis, you might as well own the stock, right? So something like Fortis, any hydroelectricity provider. So, nothing sexy, right? Just not really based on the real economy, I guess, but more about necessities that people will need to make it through life, right? Food, water, utilities, in my opinion. Right?
Interesting. And along that same route, TK had his opinion throwing in here. He says to buy high quality stocks with durable moats. He says that's what he did with his Zimbabwe trades, and they had an inflation of 800%. So he has traded in that kind of an environment.
Yeah. Oh man, we need a ticket today, man. Next week we'll have an inflation trading inflation, right?
There we go.
I believe TK, if you can type it out too, you said you own the banks as well, right? But
TK, do
do
you
you
own
own
the
the
banks
bank?
as well?
He'll let us know.
He'll let us
Let me know
know.
what he says.
He'll listen and let us
Yeah.
know. Now, you had mentioned that there is more than one option than fiat currency, of course, and the old Bitcoin craze and NFTs. Everybody knows how I feel about that shit. But Joseph, you're the expert. What do you think?
Well, I don't know. Honestly, I've been having a look at the charts. I've been trying to follow it every day, and I'm decently sure we have found the bottom.
Yeah.
And
I would agree from a technical perspective. So,
and I'm not sure what there is really to say about that. I mean, we see what's going on geopolitically. We know that Bitcoin, a lot of the other alts, they've responded to geopolitical factors. I mean, if there's, I don't know, Bitcoin is still a pretty decent place to hide your money, at least for the time being, until the government figures out, oh, hey, it's completely transparent, so we can see everything that goes on the blockchain. And then, I don't know, the pendulum will swing and we'll have to figure out a way to hide our money again.
Oh.
But I mean, for the time being, at least until Biden and his team of crack investigators gets back with, this is not really a case for, this is not really a case, this is not really a threat to national security, because we can see everything that goes on in here.
Mm.
This is great. Let's let the idiots keep doing their dark web stuff with it. This is perfect. This is a coup. Whereas, I mean, ultimately, we'll eventually maybe make the shift over to something with a little more ring signature to it, like a Monero base, or maybe a Dash, some variety of newfangled privacy coin, which allows us to optionally choose who sees and who doesn't when it comes to our transactions on the blockchain.
Mm-hmm.
But for right now, the technology isn't there. It's not, well, it is. It's out there, but it's not widespread. Yeah. And that's why I think Bitcoin is starting to rebound, because
now,
to go back.
Can I ask you a question here, Joseph? Again, I'm with you too. I'm holding it as like a non-fiat, but of course, Bitcoin doesn't really have a history in an inflationary period. Some would even say, it doesn't even have a history in a recession or depression or recession. Sorry, even though the recession we had in 2020 was very shortly lived. If you're a crypto guy here, and again, maybe it's not a question that you could answer right away, but would you be looking at things as Bitcoin as that safety, or would you be looking at, as you said, Monero, maybe decentralized finance, or would you just be buying like Tether or something just for safety? What would you be doing in this type of period?
Well, I wouldn't buy Tether if someone was going to put a gun to my head and said you had to buy Tether. USDC and other stable coins is probably a good place to put your money for the time being. If I was absolutely forced, like Bitcoin's hit the skids and everything else, and I'd shift over to USDC for sure. I have done that in the past and actually saved myself a fair amount of money. But in this case,
man, what do you do if there's going to be a conflict?
Well, there's something else I wanted to say is that decentralized finance is, a lot of the blockchains involved in that have the same transparency problems that Bitcoin does.
Oh, okay.
So, I mean, it's not even remotely decentralized, at least not yet. It's mostly a stretch goal for a lot of the different businesses involved. So, ostensibly, it's not really a safe place to put your money. Not if you're looking to, to ride out the waves, especially if the government's going to start paying attention to it.
And I'm assuming it would be tough to take out money from the DeFi market. I'm not sure about the volume. I actually own some DeFi tokens, but it's not a significant amount of money that I would want to pull out.
It's complicated, but it's not tough.
It's not tough, okay.
Yeah. Like, I don't know. Yeah. You might have to swap. You might have to, I don't know, swap your existing stake over to a stable coin, and then you can you presumably trade it in for fiat if you have a credit card or bank account.
That's interesting. Now, my little 2 bits in here, I just want to follow up with what we had asked TK a little earlier on. TK said that, yes, it was banks.
Okay.
And he also said, I feel like companies with high quality financial assets like mortgages or certain inflation protected bonds on their books and decent margins tend to do well during periods of hyperinflation. And I think he's correct in that regard, is that you have enough solid assets that you can ride that wave through. Now,
I'm going to try to find this for you guys because that's so.
I know that you've both technically called the bottom on cryptocurrency. I'm still a little bit apprehensive as to what that actually is right now because it seems too much of a pop. I think it's just desperation on behalf of people that are not confident in the markets themselves, still not educated enough to actually move ahead and actually get themselves decent stocks, as what TK was saying, with discernible moats about them to carry out long-term value accretion. So they're basically running back to the meme stock because that's all they've ever really known. I don't know if we've hit the bottom yet. I think the bottom has yet to come in terms of cryptocurrency. We still haven't found a right use case for it yet. We've talked about it being an option, but we really haven't implemented it. There's way too much legislation on its way in terms of regulation that are going to be coming from the countries involved. I don't think we can run a decentralized monetary system because it's built on the trust of a majority of users. And unfortunately, in smaller groups, that trust is diluted. So I think we're not there yet. And I don't know if that's a great option for people to be running to right now. As you said, it hasn't operated in a recessive period or a period of hyperinflation. There's no real way to tell how it's been going. Unlike gold, it halves itself periodically. Gold has never done that. So basically, I think it's probably a good time to really reconsider. It is a highly speculative asset. You can put your money into it if you like, but be ready to lose every fucking penny.
Yeah. So I just wanted to show you guys this. This is an American economist, John Exter. He passed away, I believe, 12 years ago. Sorry. Actually, maybe it was 12 years ago, 2006.
A little more than 12, but,
my bad.
Close enough.
I'm at that age where, it's like, holy crap, 2018 was like 4 years ago. But anyways.
Yeah, dude, I know that one. No. Yesterday is like a decade ago.
I was 25 when? But essentially, he came up with this pyramid about, when markets panic, what's the first thing to get hit? And basically, he created this about, the risk profiles, right? So here's his pyramid. At the bottom is the most safest or the lower risk of default, and gold is king. Gold and silver actually would be placed here. Your paper money is there as well. But I guess, we want to focus on the higher risks of default because if things go crazy, what's going to get hit right away? And, derivatives are at the very top. A lot of the paper contracts, the unfunded government liabilities. And then, this might be a shock to some people, but real estate is actually in the second level there as well, which, you always hear about.
Despite what you think, the value is highly speculative. It really is dependent on what somebody is just willing to pay. So if they decide that they just can't afford the fucking houses, it just plummets.
Especially because the mortgages are so large, so it is technically a debt. But here's a question for both of you. And again, I'm putting you guys on the spot. Where would you guys put crypto here in this pyramid? Would it be near the bottom at the lower risk of default, or would you guys be having at the top?
Top, and would probably have its own level above.
A whole new level. Okay.
A whole new level. Yeah.
It's a tough one for me. I'm
not sure I have an answer for it. I need to give it some thought.
No worries, yeah, but it's something. Yeah, I can. I didn't expect an answer because it is something you got to sort of think about. But I know,
it doesn't really give me any confidence if you want to consider that a large portion of it was stolen just recently.
Right.
And by idiots, basically. So I mean, there's not a lot of confidence I have within it as a secure currency. You can say that it's not the blockchain. Well, it doesn't matter if it's not the blockchain. What matters is somebody made off with 4.6 billion fucking dollars of coin. Like, what the fuck?
I think it's, with this, there's a lot of the semantics because technically, can Bitcoin be defaulted on? It can't, right? Unless everyone just does. Yeah. So that's the thing. I think he's looking at the default risk. But as Galen said, if people just say, hey, it's crap and it's nothing, there's no value, it could easily.
Yeah, because it's not based on anything of any sort of material, the presence. Now, everything is subjective, absolutely. We view gold as being valuable, but it does have a real-world presence, a real-world scarcity, and also a real-world use beyond just looking pretty. So
I mean, this is, I don't know, this is a continual tug of war that we simply have. Not just you and I, but I mean, like,
Yeah.
I don't know. We could stand in for different sides of this argument, because I mean, like, whenever Bitcoin pops by 30%, everyone's all like, it's based on nothing, it's going to zero. But when it's up 50, those people are conspicuously quiet.
I've heard something. Sorry, keep going, but I've heard something about Russia talking about Bitcoin being a currency. Is that something? Russia's government and central bank, so this is 2 days ago, agree to treat cryptos as a currency.
Really?
Well, that may be an attempt again
Weren't
to
they, like,
steer
2
away
weeks
from the
ago
reserve
thinking about
currency
banning
of the American
entirely?
dollar, right?
Exactly. Yeah.
Now,
Just
TK and Vix, sorry, TK and Vix both had a comment here. Let me just roll them in. TK did a quote from Ray Dalio saying, Bitcoin looks like a long duration option on a highly unknown future that I could put an amount of money in that I wouldn't mind losing about 80% of. And I think that's a valid opinion.
Yeah.
And Vix asked a question. They have a limited supply, so valued could be directly derived from supply/demand.
For Bitcoin, right?
Yes. And I agree with that, but like the Fed producing more money, they can just produce more coins. Not necessarily out of the same coin, but another one. So, you know, the idea that there is this finite supply isn't necessarily true.
But you can't go and change the Bitcoin code, can you?
Well, no, I'm not talking about. Well, you can if you fork the actual blockchain. But but what I'm saying is that you create a new coin. What's to stop you from doing that, right?
People do that all the time. Ethereum has an entire function which allows you to mint new coins. Like I could go on and mint 5 today. It doesn't mean they're necessarily going to have any value.
So that's why I know that's always been the bull case for a lot of the Bitcoin guys. I mean, you don't hear about it too much, but they've always said that Bitcoin has that, you know, that sort of
21 million. But I mean, that doesn't matter.
Deflationary,
What if I make another Bitcoin, which can happen easily enough, and then
Bitcoin already has 6 or 7 different.
Exactly right. So it's that you dilute value by creating more.
None of them are worth the spit I throw in my coffee cup.
Well, exactly. So I mean, with gold, we've only been able to pull out of the ground 3 Olympic-sized pools worth in the entire history of mankind, at least as far as we've been recording. And, you know, there's only so much left. So unless we start mining asteroids, which is not necessarily likely, gold will retain the value that it has right now.
Yeah. And the thing about gold, you know, again, sorry guys, you guys know I'm writing a piece on Valentine's Day about silver. So it's like, you know, I'm taking silver
your love affair with silver? I love it.
I'm taking silver on a date on the 14th. But I mean, you know, the thing about metals, as Galen mentioned, the whole idea of gold, stock to flow ratio, right? That's why it's been history's best money, because essentially, even if the prices of gold increase so high, because gold is so rare and so difficult to get out of the ground, the world supply of new gold, or the flow, will always be about 2%, right? Because say gold hit 20K, it's not like Gail and I and Joseph are gonna go open a new gold mine, right? To you know, go look for gold, because it's so rare. It only grows by 2%, which is hence why the best stock to flow ratio and why gold has been the best money. But here's the thing. Bitcoin will actually overtake gold as the best stock to flow ratio by 2025 because of the way that the halving will sort of work, right? So it's an interesting, you know, discussion. But
Joseph, and this speaks more to what we were talking about, Vishal, as far as scarcity and stuff. I'm more interested in the Bitcoins or the cryptocurrency. Sorry, I keep using that like Band-Aid, but the cryptocurrency that is inclined to keep people from speculatively trading it to actually just holding it. For instance, Shiba Inu, with the idea that it actually just, you bury it or a portion of it will disappear, right? So that, exactly, right? Well, I mean, they burn it, but I mean, unless you bury your coins, they could be part of that burn. So in doing that, when you bury them, then you actually accrete some sort of value, or at least some sort of stability in scarcity of the actual product. And there were other ones. I think was it Solano? Where's the buy and burn? Who's the buy and burn guys? There's somebody I looked up.
That's not Solano. No.
Okay. What? Shit. Solano. Maybe it was the guys that you were asking me to look into. No, that wasn't Datametrics. There was a particular cryptocurrency that has an amount of cryptocurrency that can be burned. And if you become a stakeholder within the company, you can get some of that accretive value from the burn, and you just keep holding it and holding it and holding it and holding it. Those kinds of ideas, I'm more inclined to feel better about.
It sounds familiar, but I can't remember.
Yeah, it's just because it steers away from the idea of just flipping it, which I think increases the volatility of the asset immensely to the point where it's just not trustworthy, right? So if you're just you're incentivized to just hold it, then there's got to be some sort of, a value that could be attached to it. So those ones in the long run, I think I'd be more inclined to look at than ones that
as we speak, boys, markets are coming down hard. Nasdaq's down over 3% here.
Holy
wow.
Shit.
Maybe there's maybe the Russians are already moving in. I don't know. No, I think it's just.
I think this is just preparation, as you said, and people
get out before the weekend. Yeah, because anything could happen.
Realizing what's going to happen.
Just quickly, Galen.
Yep.
What if there's a crypto that is gold or silver backed? Because there are a few.
There are. And those ones I don't necessarily mind because, like the dollar when it was supposed to be what it was, when it was backed by a gold standard, there is some inherent value to it, right? You can shift one for the other. Like if there's the promise that I can turn this in and receive in kind the material of gold, then I'm all for that. That's something that I can actually trust. I would have to trust the institution that's doing the transactions, so I know that fucking gold is there. Absolutely, right? And that's where the Fed does come in to a certain extent, or did, that they ensured that there was enough gold in Fort Knox or wherever else they happened to be holding it to cover what they had printed in terms of paper money.
And then I think it was so for people who don't know that story, basically, because the U.S. was the reserve currency, they said they'll only grow the amount of dollars 2% per year because that's how much gold they would mine.
Nope.
But, the U.S. is like, heck, we can just print as much dollars as we want because the rest of the world's not going to come and knock the door for the gold, right? They're not going to know.
Yep.
So the U.S. began printing extra dollars, used it to buy companies over in Europe. And then it was the French who were like, wait a minute. I bet you these guys don't have the gold. So they sent their aircraft carrier over, to take their gold back. And then a few days later, I think Nixon had his infamous, we're closing the gold window now.
Yeah, that fucking guy. I mean, it's not that guy because, he was a bastard. But the idea that the country itself as a nation had shifted from the gold standard on the sly and then got caught doing it. Fucking people. Jesus. I don't know. I don't have much confidence in an economy that doesn't base itself on a real material.
Right. All right. I think we've gone over our time there, but I think we got to set this up for next week with TK. We can talk about inflation, like how to invest in an inflationary example. We have someone who saw that in Zimbabwe. Galen, you might still. I think I have my $1 million too, so we can maybe.
Yes, I do. I have my $1 million Zimbabwe dollars here on my desk. I feel like a rich millionaire right now. Right. I don't know what I can buy with it. Probably nothing, but it looks pretty good.
Maybe a loaf of bread at least. Or maybe that's over $1 million now. I don't know.
Who knows? I would like to part with just one thing for people, and I'm sure that I sound like I'm a broken record, but fuck it, it deserves to be said. Tesla, again, is under the scrutiny of the public eye because the motherfuckers are continuing to break labor relations laws and also send out cars that are assembled like blind children. I just, they use drunk monkeys to put these things together. They're constantly recalling them. Honest to God, there are more options out there. If you're looking for an EV vehicle that doesn't steer you into a fucking cement pillar when you give it the power to steer by itself, then, go for it, because I'm sure you'll find a whole lot more variety out there than Tesla. This is something that we've made out of nothing, created and fanned the flame of, and it doesn't fucking deserve it. We need to pull back, get a little bit of a reality check, and let this beaver tooth braggart fraud go back to where he came from. So there we go. That was nasty.
Wow,
all right.
You actually kept it under a minute.
Yeah, I know. I got lots more to say, but I'm tired and I got a headache.
We had a lot of good topics though today, man. That was a great show, and I hope our viewers here enjoyed it. And like I said, I think it'll be great to have a man who saw inflation firsthand with TK explaining how things go, because it's something I've never lived through. I don't want to ask Galen his age, but I don't know.
No, well, it's okay. I came from an era that if I put money in the bank, I had 10% compound interest.
Right. Yeah.
So yeah, it's a different time.
And then I think we should all do that one as well that Joseph was talking about a little debate, I guess, Bitcoin, versus gold or something like the debate about Bitcoin being a safe haven or not. I think that would be an interesting.
I got you. Now, very quickly, just one last.
Am I going to argue that it isn't? Just honestly, I've really kind of turned about face on that one in the past.
Right. Yeah.
With a lot of the information, a lot of the things I'm seeing, it's like I don't think it is anymore. I really don't. I mean, hey, Galen, do you want to try arguing my point? We'll see if we can really fuck this up.
I think my tongue will automatically just fall out of my mouth. I don't think I can do that. But it's a very interesting discussion nonetheless. I think we can discuss it. It'll be more nuanced than most people because, typically with this particular asset, you have people that are rabidly for it and people that are really against it. So, if there's somewhere to meet in the middle, then maybe there's somewhere to meet in the middle. Now, I've got one last question here and comment from Vix. I have no position in metals, but this discussion definitely makes me want to consider it.
Yeah.
Does gold seem to be already topping off, though?
So this is my take on gold. Like, you guys sort of heard my surprise there, but I have this weekly chart on gold, which, I was saying, hey, if we break above this, it's called like a wedge or a triangle, whatever you want to call it. But, if we get a weekly close above this, which it looks like we're going to get, not too strong, but this is sort of foretelling that technically whenever these patterns break, you expect, maybe not right away, but maybe it'll come back, retest. But essentially, gold has been consolidating ever since it made record highs here back in July of 2020. When we hit around $2,049. So with a breakout pattern like this, we might be taking off. We might be making new highs. And generally, gold is, as I said, that confidence crisis metal, right? When you're losing faith in governments and central banks and the fiat currency, you look into gold. And I just want to stress one thing too. It's a purchasing power thing, right? Like if gold is ever $5,000 an ounce or $10,000 an ounce, it's not a nice world to live in. I think people should sort of understand that. But what it does is ensures that your purchasing power that you have today will remain intact when gold and silver hit 5,000, because prices for bread and milk and stuff are going to be crazy at that time, right?
Absolutely.
So it's more of an insurance. I think that's a good sort of word.
It's a commodity that you can buy into that will help you survive the ride.
Right.
Or you can be like a nerd like me that like loves silver coins, and I have this collection that I spent too much money on. Like, don't do what I do, and I buy silver bullion from every country in the world. And one day I'll showcase it to you guys. I just don't want to get robbed.
No, that sounds good. No, I'm of the theory, and I was told this a long time ago from somebody that really knows what they're doing, that I just buy silver ingots. And if the world ever falls to shit, then you've got something you can take to the store and actually buy the bread if there's no currency to be had. So there you go.
If VIX is Canadian, if you live here in Canada, you can get your silver maple. That's the 1 ounce bullion, and I think they go for like $40 Canadian for 1 ounce coin. Or you can do the bars like Galen said, which I think are similarly priced.
They're a little cheaper because they don't have the designs on them.
Okay, yeah, there we go. So I was just going to say, sometimes you can find cheaper silver. Usually the Canadian, because you live in Canada, the Canadian maple should be the cheapest. But believe it or not, South Africa is making their Kruger rands, 1 ounce Kruger rands, and that used to be the first gold bullion coin ever traded. when Americans were allowed to own gold again in the 70s after the gold standard fell. But South Korea's Kruger rand, not South Korea, South Africa's Kruger rand, they started minting a 1 ounce silver Kruger rand, and I found that the premiums for that is actually sometimes $2 or $3 cheaper than the Canadian maple. So that might be another way. Silver is silver, right? It's 1 ounce silver. I think Canada is just 0.9999, whereas the Kruger rand is like 0.999. So it's like pretty much similar.
Minusculely different.
Very minusculely different. Stay away from the Chinese panda silver ounces, because they've actually done sort of what empires used to do back in the day. Is they used to have a 31 ounce coin. So 1 ounce is usually 28 grams, but in precious metals, it's the troy ounce, which is spelled TROYES. That's the city, sorry, but it's the TROY. That's how you spell the ounce. But that measurement was made in Troyes in France. So it's 31 gram for bullion for 1 ounce. But what the Chinese have been doing ever since 2014 is they're minting only 30-gram silver coins. So they're chipping off that 1 gram, but they're still selling it at a full ounce price. So
Bastards.
That's what the Roman Empire and all these guys, that's how inflation used to happen back in the day when they used to take the coins.
Oh, yeah, and they used to shave them.
Shave it off and say, hey, that's a full 1 ounce silver, but there's only, 75% of silver. And then
exactly. We keep the rest in the treasury. Thanks very much for coming out.
And then basically when you got to the end of the Roman Empire, it was like only 3% left, 3 grams left, or 3% of the coin was actually silver, and 97 was
nickel,
crap,
wasn't it, or whatever, something. All right.
Anyways,
well,
that was fun.
Vix had one more comment. He thought it was very insightful, the show, and he's looking forward to more of these discussions and live streams. Vix, it was great to have you on board. Wonderful questions and good insight. Same with TK. Hopefully you'll be on screen this next week. But that's it
from this inflationary trap, TK.
Yeah, exactly, brother.
You're the man with the knowledge.
That's right. Well, we're going to say goodbye because we've been in your life probably far too long as it is. Very top is Joseph. He's our crypto expert, and he was very sort of insightful today. I just used that word a lot today. You were very erudite. There we go. Vishal is next below, and he's our chart and macroeconomic man. And I'm the guy that drinks the prune juice in the basement and screams at the kids to get off the fucking lawn. So we're going to see you all next week, and hope you have a great week. And holy shit, hope nothing fucking disappears between now and then. All right, then. Bye-bye. Ha 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 ha.